Good afternoon. This is Tom Aspray from the ViperReport. It's Wednesday, January 30th, midway in the afternoon. Fed Chair Powell is just taking questions, and so far the market has liked what he said about rate policy. Dow was up about 250 before that, now up over 400. So it should be a lot interesting last hour or so in the markets. In my weekend seminar for Wealth 365, I didn't have a chance to touch on one of the topics that I spent a lot of time on doing my research, and also in teaching and mentoring. I can spend an hour or two explaining how you can better pick your entry point, reducing your risk and increasing your profit possibilities. Over the years, I've seen way too many people get stopped out of a good stock or a good ETF, not because their pick was wrong, but just because their entry price was too high. Since the start of the new year, I've been discussing the bullish readings from the advanced decline lines and how they favored buying pullbacks in the market. There have been some pretty sharp ones, particularly even in the last week and a half, but we've been looking to buy on those pullbacks. Let's take a look at a couple examples. After the close on January 18th, I had a long list of buy candidates as I thought the long weekend would present a buying opportunity. One was in the XME, that's the SPDR S&P Metals and Mining. Often my orders will confuse new clients as there's a learning curve. For example, XME closed on Friday the 18th at 29.16 after a high of 29.32. I was looking to buy a 3.7% pullback in XME, which as it turned out was hit the next trading day on Tuesday, the 22nd. Actually, both my buy levels were hit, as I felt there was a good risk entry. We could protect that position with a stop here with a risk of around 4%. It's having a good day today, up a buck, and has broken above some key resistance. Technically, that's a strong move. I do use a combination of techniques to target my buy levels, including both Fibonacci pullbacks, pivot levels, etc., and close examination, as I did cover briefly in Saturday's seminar, of the intraday charts. An ETF I liked going into the week of the 22nd was FDN. That's the first Dow Jones Trust Internet. Has pretty much all the FANG stocks in there. No Apple, but everything else. And it had closed at 30.46. My initial buy level was at 126.41. That was a little over a 3% pullback here, and and I was going to buy even more lower if we got there. So far we haven't. It's acting pretty well here. Of course, we have earnings in Facebook after the close today, and then Amazon on Thursday. If we break out of this range, the chart would suggest a move potentially towards 138 to 140. Those of you who read my Forbes article may remember my bullish commentary on crude oil when most were bearish early in January. We took a quick trade for about a 12% profit in about 5 days. We wanted to get back in. On the 18th, we closed USO. That's a ETF that tracks the crude oil futures. Closed at 11.37. So I put an order out to buy 50%. That's half a position. I like to stagger positions in because I want to have a position established, particularly when I'm quite bullish, at least part of a position. If we get lower, I want to be even longer. So the 11.06 level was hit early on the 22nd. And then on this Monday, we hit the second level at 10.82, second buy level. Currently, we're trading about 11.40 in USO, a little bit off the highs. You can see it hit a high of 11.54 earlier today. Of course, I use the same procedure with stocks. Synopsys, SNPS, was a favorite. I tried to buy it down in here, but didn't quite get it. We had a nice move up, closed very strong at the start of the week. My buy levels were at 91.66 and at 90.48. We got down below 90 yesterday. Now we're trading at 92.01. bullish chart that I showed in the Viper Hot Stocks says it can get close to 98 to 100 on the next move up. And risk now is well established because the support levels here are quite clear. Of course, we are also along the Invesco QQQ Trust and the SPY. We added to it in yesterday's drop. And both are now holding a profit and looking pretty good. The Qs, if they break this downtrend here, the next real target is in the 170 to 172 area. In my emails and videos, you've heard me talk a lot about the AD line analysis and why it's such an important tool that I use. It's been really pointing to be a buyer here in the new year, and today is a great example. This is one of the a chart from the or a table from the Wall Street Journal showing currently we have 2,456 stocks advancing, just 537 declining. That's very strong. It was less than 2-to-1 positive about 10 or 11 this morning when I tweeted about it. The AD line is something that has been a bellwether indicator for me, and I've taught a number of people how to use it. Those who understand the AD line analysis, I feel confident will be able to escape the next bear market and time corrections like the last one quite successfully. If you're interested, there's still a few openings available in my one-on-one training course. This is just me and the student. I'm online with you. I answer your questions until I'm pretty confident that you understand the material and we move on to the next section. If you're interested in learning more about this, you can go to ViperReport.com. Under mentoring, you click down Tom's Intensive AD Line course. You can also Google Tom's AD course. You'll come up with a link. That'll take you to the description of the course, what it includes. It's quite a bargain in the industry at just $749 for the entire course. And we don't stop until I'm confident you really understand it. Watch the close. The S&P is now up 46 points at 2685, and the Dow's up close to 500. So I'll have more tomorrow in my Viper ETF and Hot Stocks report, as well as update the recommendations for Monday. Hope you have a good week in the markets. Thank you.